Hello there, welcome and thank you for joining us today. I'm Marche, the webinar director here at Advice Chaser. Before we introduce our guests and get started, I do need to do a little bit of legal housekeeping. Advice Chaser, the host of this webinar, is not a registered investment advisor. We cannot and do not give financial advice. Today's presentation is for educational purposes only and cannot be considered advice for any person's individual situation. Advice Chaser regularly hosts informative webinars, such as this one, featuring a variety of knowledgeable professionals, many of whom are licensed advisors. Any opinions, ideas, jokes, or principles expressed by presenters are their own, and however true, funny, or interesting, are not endorsed by Advice Chaser. Please do not act on the information you hear today without consulting a qualified financial professional. Well, we are so excited to have you here at this webinar today. Eric, if you want to advance to the next slide for me. We're going to be talking about S corporations and LLCs, choosing your small business entity, and we're really thrilled to be presenting on this topic. Attendees are muted, but we encourage you to ask questions using the chat box, and the presenter will answer those queries during or after the webinar today as appropriate. We do have a question and answer period at the end. If you ask a question in the chat box and we don't have a chance to get to it, please leave your phone number as well. We will make sure someone reaches out to you after today's event. Once again, we want this experience to be as educational as possible, so please don't hesitate to ask. That's what we're here for. Well, I'd love to introduce you to today's moderator. Chase Tusshouse is a partner with Tusshouse Wealth Management. Prior to becoming a financial advisor, Chase worked in the manufacturing industry as an engineer for L3 Harris and SpaceX. Chase graduated from the University of San Diego with a Bachelor of Arts and Science degrees in Industrial and Systems Engineering. He's a member of the University of San Diego Alumni Board, co-chair of USD Shiley Marcos's School of Engineering and Computer Science Alumni Council, and a member of the Oceanside Theater Company Board of Directors. He and his wife spend their time mentoring local youth, and we're excited to have him here to moderate and monitor questions. Chase, why don't you come off of mute, say hello so people can see your face.
Thanks, Marche. Yep, I'm really excited for our presenter today, Eric. I've worked closely together in the past, and I think you'll find him very knowledgeable. So I'll pass it back to you, and we'll get this rolling.
Very good. I'll tell you a little bit about our presenter today. Eric Gregg has been a CPA in San Diego for roughly 15 years. After starting his career with a mid-sized firm for 13 years, he has since joined with his wife to form Team Gregg CPAs. While the name of the firm is a nod to the fact that he and his wife are both CPAs, it's also representative of how he views his relationship with his clients through open communication. A CPA client relationship based on teamwork allows for collaboration and ultimately puts everyone involved in the best position for success. And Eric, without further ado, I'm going to go ahead and turn the time over to you. And we're excited to hear what you have to say today.
All right, well, great. Thank you, everybody, for joining us. As Marche said, we're going to discuss entity choice. And while that's driven a lot by tax, as we'll see as we go through the presentation, there's other items that you want to consider as well. So before we get started, a note about the presentation. Every situation is different. Please work with your trusted advisor regarding your legal and tax situation around entity choice. I'm here in San Diego, as Marche, I believe, said. So a lot of this informational purpose is focused around California entities, although the majority of that information will apply to multiple states. So the main topic here, I probably have this conversation once a week with somebody, is I'm starting a business or I have a business, I've been working as a consultant, and should I set up an entity? If so, what entity should I choose? Like I said, there's big tax considerations, which we will see. And, that's going to be a little bit further down, but there's other considerations as well, both legal and some other structural type issues that we'll go through. Without giving away the whole presentation, most of the time people end up choosing between an LLC and an S Corp, and we'll see why as we go here. But first, well, what about a C corporation? So a C corporation is an option for closely held businesses. They used to be a lot more expensive from a tax perspective than they are now. They recently became more enticing because the top tax rate of a C corporation dropped from 35 to 21%. So that made it more enticing, but it's still more costly to have a C Corp than say an S Corp because there's 2 layers of tax. So some reasons that you may want to take a C Corp, because there are some advantages. The one we have listed there, small business stock gain exclusion. It's kind of outside the scope of this presentation that we're doing, but essentially there's a long-term strategy that if you start a C Corp, keep it as a C Corp, sell it for under $50 million, you won't pay any federal tax on that sale. It's excluded from taxation if it's a stock transaction. And that's part of the reason I'm saying it's outside this scope, is because stock transaction versus asset sale is a bigger topic. And anyway, you kind of got to thread a needle, but that could be a reason that you would want to do it. Another potential reason is ownership structure issues. So as we go along, we'll see, for instance, with an S corporation, you have to be a US citizen. You can't have foreign owners. So if you're saying, I want to have a foreign owner, well, S Corp's just automatically blown out the water, and we might have to take a look at a C Corp. There's also some industry specific reasons. If you're going to get multi rounds of funding because you're in the technology / research and development area and you're going to be building something and we're going to do a series A, B, C down the road, then yeah, C Corp might be your example or a good structure set up for that. It's kind of known in that industry that that's the structure that investors want, et cetera, things like that. So that's quickly on C Corp, but without further ado, like I said, most people end up choosing S Corp versus LLC. So again, have a client come to me and say, hey, I've been working as a consultant. Somebody's been paying me, not as an employee, and that's fine. But I've heard maybe I should start an entity. What should I start? Or, hey, my buddy and I are going to start a business. We're thinking of, setting it up this way. Why would that be advantageous one way or the other? So we're going to start with some of the non-tax reasons, and then we'll kind of hit it at the end with the big takeaway for a CPA with the tax piece of it. So legal requirements. So if you've been working just as a consultant, you're being paid outside, not as an employee, you pay for your own expenses, and every year on your return, you file what we call a Schedule C, report your income, take your expenses. Should you set up an entity? Well, legally speaking, the easiest entity would be able to set up as an LLC. If you're the only owner, a single member LLC, which is what SMLLC stands for. Super easy to set up, very little ongoing legal requirements. You file a one-page document here in California, once a year with the Secretary of State. That's kind of the extent of it. Super easy. You could probably do LegalZoom, although I always recommend you work with a lawyer. But an S Corp, on the other hand, you need additional one-time elections when you get set up. You need to have ongoing board meetings annually and things of that nature. So just in this case, comparing, say, being a single member LLC, like I said, as a consultant versus an S corporation has a couple more hoops. Filing requirements. So not necessarily talking about dollars of tax, but tax related item here is, what type of tax return do you have to file if you set up one of these different types of entities? So again, a single member LLC, you're the only person in it. It's disregarded for federal income tax purposes. You don't even have to file anything each year. You just set it up and they pretend like it's still just you, but you have another layer of protection for legal purposes. Some states, like my home state of California, do require an annual return. It's about 4 pages long, though, compared to a regular tax return, which is pages and pages and schedules and schedules. So that's pretty easy for a single member LLC. Multi-member LLC and S Corp, you got a full separate return required from you personally, both federally and state. So that kind of just adds an extra layer of something you got to do if you want to set up an entity. So entity level taxation. So what is the cost of some of these different entities, right? And again, a LLC has no federal level tax. All the income gets passed right on through to your personal return. You just pay tax on it personally. That's the same thing with an S corporation, no federal level tax. States, however, have different rules. Here in California with an LLC, you have an $800 minimum tax per year, and that's actually the same with an S Corp. But here in California, our LLCs have a gross receipts fee. So if you make over 500,000, you got to pay an extra $2,500, I believe it is. If you make over $1 million, it goes up to 6,000 and so on. So there's a little bit of a entity level cost there in the grand scheme of our tax scale as a nation. That level is very, very little. An S Corp is slightly different in that you pay the minimum of 800 or 1.5% of your net income. And so just a super quick note on, gross receipt fee versus tax on net income. If you're in a industry, say you're a wholesaler or something, where you buy things and then resell them for a slight markup, 3% or something, you might not want to go the LLC route, because you could do $20 million worth of sales, but only, clear $200,000 or something. I'm making up a real small number, but you got real small margins, and you'll pay upwards of $13,000 of LLC gross receipts fees, where 1.5% of $200,000 is $3,000. So it can add up quickly if you're going to be in a high gross receipts industry. So
hey, Eric, we did have sorry to interrupt. We had one question come in there about on the previous slide. Entity level taxation. So someone asked what about multi-member LLCs? Are they taxed any differently than the LLCs you described here? Is that any different than single owner LLCs?
Nope. So single member LLCs and multi-member LLCs, again, federally, the single member LLC doesn't even have to file anything and there's no tax. Multi-member LLC, there's no tax at the federal level. All the income gets reported on the individual members' owners, and you split it up. And we'll see on the next slide, how do you split it up is a reason you may want to select one entity or another. But there's no federal level tax for single member or multi-member. And then the California is the same, 800 minimum and gross receipts on top of that. So hopefully that answers that.
Great.
Follow up if not.
Awesome. Thanks, Eric.
Okay, great. So speaking of a multi-member LLC, a reason now we're looking at throw single member LLC, kind of put that one to the side. We're comparing just a multi-member LLC and an S corporation. A big reason that you may choose an LLC is if you want to do some sort of what we call special allocations. If Chase and I were going to start an entity and I'm going to bring nothing to the table besides my smarts and good looks, and Chase is going to bring, the money. He's the money guy. Well, once we start divvying up the profits, we may have some sort of a agreement that, hey, you put the money forward, so you're going to get profit return until you get to the amount you put in, and then we'll start splitting it 50-50 after that, or things of that nature. With an S corp, you can't do any special allocation. Everything is pro rata based on how you came in. So if I come in and I say I own 50 and Chase owns 50 in an S corp, he can't put more money in. First off, we'd have to take a loan from him, which is a different thing, but we couldn't pay him profits first and then me profits, or give him 60% profit, me 40% profit. And conversely, when it's time to take money out of the company, we got to take it out at the same time at the same rate. We own it 50-50. He needs 10 grand, I'm getting 10 grand. In an LLC, you can do different timing. People can take their distribution whenever they want. And you can split the income really however you guys agree in your operating agreement. And so if you foresee I'm getting into a business with somebody and we are not ready to be splitting things even, the S Corp might not be the way to go, because it's just very much more restrictive in that way. And so the LLC would probably be a better way to go if you want to do that. The good part about the LLC, if you want to think about it conceptually, especially with the distribution piece, is each person keeps their own essential like bank account or like investment account. I put in 0, Chase put in $500,000. We split profits, so he goes up to 7 and I go up to 200, and then he needs to take out cash, but I don't want to. We just take it off his, and so it's a running tally. It's called your capital account, and anyway, you just kind of go about it that way.
Eric,
yeah,
Eric, we had a few questions, and I totally agree with this, that they thought maybe I might be the good looking one, but anyways, we'll answer that later. But question on this, as far as does the number of employees kind of change the equation when you're thinking about something like this? Because now you have maybe money coming out, whether it's evenly or unevenly, but then you need to pay. Is that just kind of part of the expenses, or does that kind of fit into the equation when you're trying to figure out which entity might be best? And maybe you might be covering this later on.
No, I don't think I was going to speak to employees at all. I'd be interested to know maybe a little more about where their thought process is going with that. I don't believe the number of employees makes a difference. Now, if Chase and I are going to form an entity, but we're kind of going to run as 2 silos, right? Like I'll do the CPA work and he'll do the, advisory work. And I'm going to have 4 employees that only work for me, and he's going to have 2 employees that work for him. Then I would say, yeah, this is a time where an LLC probably makes more sense than an S Corp, because we want to allocate less net income to me because I spent more on employees than he did. So yeah, absolutely. If it was an S Corp, we just throw it all together, divide by 2, and that's where we get to. Now, we could change some of that up in an S Corp with how much we pay each other, but we're kind of getting down the road. So I think there's a way. I don't think the number of employees really factors in LLC versus S Corp, but if you're thinking, who's paying for them, yeah, I could see where that may be a reason you might choose LLC versus S Corp or something.
Great, thanks, Eric.
Okay, anything else, or we're good for now?
We had a few other questions come in, but I think when we hit the Q&A, they're a little bit more general, so we'll dive into that then.
Okay, great. So another reason, again, talking LLC versus S Corp, including, I suppose, a single member LLC, but mainly I'm talking multi-member, is debt basis. Are you going to need to borrow money in your business model? If so, you're probably going to want to go the LLC route. So think, as we see in the background here, a rental property or some sort of investment property that's of a nature where you normally have a mortgage on a piece of property. If you have a mortgage in an S corporation, well, let me back up. A mortgage for tax purposes is called qualified, well, now I just blanked on it. It's qualified debt. So the mortgage in an LLC gives you what we call basis, meaning you can take losses against that mortgage, even if you haven't personally guaranteed it, if it's just guaranteed by the house. The only way you get to take advantage of debt in an S corporation is if you personally put money in. So again, this is a huge reason that I think 99 out of 100 CPAs, if you say, hey, I'm buying a rental property, I want to put it in entities to have some legal protection, which entity should I choose? LLC all day. Because if you put it in an S corporation, you know, you put $100,000 down, you take a mortgage of $900,000, and you start taking that depreciation, and you know, maybe the property is net zero or has a small cash flow, but as we're depreciating it on paper, you have a loss. Well, you don't get to take any loss against that 900,000 in an S corporation, and you do in an LLC. And so it's kind of time value of money, trying to get the best benefit. So I was just talking off my head. Let me make sure I covered everything that's on this slide. You receive benefit for mortgage, recourse debt. That's basically when you do put money in out of your own pocket, we call that. LLC is almost always recommended for real estate because you get that mortgage. You only received, yeah. So that's the debt basis issue. Huge difference in an LLC and an S corporation. And overall, the IRS doesn't love when you loan money to your own S corporation. So there's that. Another reason, and this is kind of sticking with the real estate, but it could be seen in other ways too, what we call the deemed sales rules. So big difference between an S corp and an LLC. I buy a piece of property in an S corp for $100,000 way back in the day. Let's just example. It's grown up to $1 million, and for whatever reason, I'm done with having it in the entity. I just want to take it back and own it personally. I was the only one. I didn't have any partners. I just kept it in an entity to kind of have some liability protection. Now, times past, it's gone up $900,000 of value. If I just simply want to take it out from my 100% owned S corp to my 100% owned personally piece of property, the IRS treats that as a deemed sale from the S corp to me as two individuals. I have to pay tax simply to get my property back on the $900,000 of gain, even if I don't sell it. I just want to take it out. Or it was a rental property, now it's going to be my personal residence. I just want it back. I don't want an entity anymore. I got to pay $900,000. An LLC, there are no deemed sale rules. So I would just take it out at its basis, which is the $100,000, excluding depreciation, et cetera, that we've taken against it. But I just take it out, and now what it was in the LLC is what it was in mine. If I sell it, I'll pay tax. But if I hold it for the next 30 years, I don't have tax for another 30 years. So again, time value of money and kind of putting yourself at a disadvantage for no reason if you put a piece of appreciating asset in an S corp versus an LLC. So that's the deemed sale rule, and a reason you may, you know, again, that's kind of 1B to the 1A that was debt basis of owning real estate in an LLC versus an S corp. Well, 1B is this deemed sale rule. And you might say, well, once I set it up, why would I take it out? It's more so, why would you put a pitfall way out in front of you if there's no big benefit to doing it? So, okay. Now the tax difference between an S corp and an LLC, and the real reason that the S corp becomes beneficial for, especially if we're thinking about the person who's in the consultant role, and do I want to set up an entity? Should it be an LLC? Should it be an S corp? So it could also work if you have other partners, but I think it's easier if we just think about me as a consultant earning money. Should I earn it as an S corp? What's the benefit of setting up an S corp? What we're talking about here is payroll taxes. Okay, so if I hold my activity in an LLC, I hold it in an S corp, I pay tax on it at my individual rate. Federally, that's up to 37% right now. Here in California, it's up to 13%, but that's the same for an LLC and an S corp. The difference is payroll taxes. In an LLC, if I run a consulting business out of an LLC, the IRS deems that to be self-employment income, 100% of it. Even if somebody else does the work and I'm just collecting the profits, self-employment income. And self-employment is about 15.3%. roughly. That's the Social Security and Medicare, both the quote unquote employer piece and the employee piece. When you're the only person in a 100% owned consulting business of an LLC, it's all subject to self-employment tax. S Corp is not automatically subject to self-employment tax. So if I simply run my $100,000 of net income as a LLC through an S Corp, I save myself somewhere in the region of $12,000 to $15,000. It's hard to put the number on because you get to deduct half of it and half of a half. And anyway, it's somewhere in there. It's a blended rate. You don't pay a full 15, but that's kind of what we're talking about. Now, the IRS knows this, right? They set the rules up. So they say, okay, well, if you're the owner of a S corporation, you have to pay yourself a reasonable wage. So what does that mean? There's no definition. And what I tell my clients, and again, you talk to your tax advisor when the time comes, but you know, if you hired somebody to do what you do, what would you pay them? In my industry, I'm not going to pay another CPA 100% of what he can bring in. If his billing rate's $250, I'm going to pay him 30 to 40% of that probably, right? If you kind of think it about that way. So that's where I kind of try to point my clients to determine what reasonable is. But essentially by paying that reasonable wage, you're giving back some of the payroll taxes. So LLC versus S Corp, you save 100%. Well, now I got to pay myself 24,000 out of my 100 in my example that I was using. And so I only pay payroll taxes on that. So what is the savings of an S Corp versus an LLC? It's payroll taxes on $76,000 in my example. And I know I'm not writing them down, so I'm just doing them in my head. Maybe I completely biffed it, but that's what we're talking about. So then the question becomes, okay, given everything else we've talked about, there's additional filing requirements of an S corporation. You got to set up payroll. You got to pay payroll taxes and have payroll run. You got to file a separate tax return. At what point do the cost of those become outweighed by the tax savings of not paying self-employment is the biggest piece of S Corp versus LLC from a tax perspective. I like to put a number on, if you tell me, hey, I'm a consultant and I'm going to pull in at least 80,000 a year of net income, I think you should really, really heavily look at having an S corporation as opposed to either being a sole proprietor, which is nothing, or a single member LLC. So I think that ends the meat of my presentation. Chase, did we get any other specific questions? If not, we can go to some of the general.
Yeah.
About.
Let's we did get a few questions throughout the way here, so let's we'll dive into a few of them here. So the first one, so what happens if someone starts with a single member LLC and then they decide to bring on another person? Would they have to convert that LLC, or what would the process be there?
Yeah, basically you file a first year multi-member LLC return, form 1065 we call it, but now you're just a multi-member LLC. You don't have to have a new filing with your state. When you do file kind of that statement of information, we call it here in California, or whatever you got to file each year to just say, yeah, I'm still around. You'll just say now we have 2 members or 3 members or whatever. So that's a real smooth transition. I mean, you definitely want to make sure that you don't have any issues with disguised sale rules. And again, this is all getting outside of this conversation, but if you're trying, just quickly, I'll touch on disguised sale rules because just to be careful, if you bring somebody on and they put in $1 million, which is more than you have in it, and then you immediately distribute yourself $1 million, the IRS is going to be like, that was a sale, that wasn't bringing on a new partner. Anyway, that's getting too deep, I suppose. But to answer your question, yes, you can easily transition from a single member to a multi-member.
And then is that kind of similar then if you're going from LLC to like S Corp, or I mean potentially even C Corp? Is that possible to go that direction, or vice versa?
That gets a lot trickier. So it's hard to go. So LLC is originally classified as a partnership, and that's what we've been talking about. You can make an election to be treated as a C Corp. Then you could make an election from there to be taxed as an S Corp. You definitely want to talk to somebody about that, especially if you've had business going on for a while. So I see a lot where somebody sets up an LLC, immediately makes a election to be taxed as a C corporation, taxed as an S corporation. And I'll be completely honest with you, I'm not really sure why they do that immediately instead of just setting up a corporation. You'd have to ask a entity lawyer. It's probably because it's a little bit easier and cheaper to set up the LLC first, I guess. That's my guess. But if you've been operating for a while, that get pretty tricky, and make sure you do the ABC to make sure you don't trip yourself up, or the 1, 2, 3 through the steps. A potential issue of an S Corp is always keeping your S status, we call it, and not blowing your S election, because if you do, then you're taxed as a C corporation, as we talked about. That means 2 layers of tax and things of that nature. So they're really 2 separate beasts. Once you become an S Corp, if you want to make the change, there are reasons you can, but you want to make sure you keep that intact for the most part.
Great. Yeah, and there's actually, we got another question kind of similar to this. You talked about LLCs can classify as potentially C Corp or an S Corp. How does that kind of fit into all of this? Or is it, are you getting the best of both worlds if you decide to be an LLC and classify as an S Corp?
No, not really. So at least for everything I talked about with special allocations, debt basis, deemed sale rules, the taxation, the need to have payroll, once you've made an entity taxation election and or an S Corp election, the IRS doesn't care if you started as an LLC or not. You're basically subject to these S Corp tax rules, which those are all tax rules, right? We can't specially allocate, that's a tax rule. We can't take debt basis, that's a tax rule. We can't. So if you started as LLC, but you elect an S Corp, you're essentially just, for me as a CPA, you're an S Corp. It doesn't really matter that you started as an LLC. You're subject to no foreign owners, all of those things. Now you could have foreign owners back when you were an LLC, but taxed as a partnership, I guess I should have been saying all along, an LLC tax as a partnership, an LLC tax as a partnership, but anyway.
Okay. Yeah, and we actually did have a question about partnerships, because you just mentioned it here just offhand. So is that essentially an LLC, you're just picking a classification and the standard is you're classifying as a partnership? Is that kind of how that works? Or is it something different from what we have been talking about?
Well, can you ask me the question again? I'm sorry.
So partnerships, how does that kind of fit into LLCs, S Corps, C Corps, or is it kind of what we have been talking about?
Yeah, so I mean, there's limited partnerships, there's general partnerships, and I guess that's kind of outside what we wanted to talk about here today. I think I think when the conversation I have once a week is usually with one person who's deciding what kind of entity they want to have. Like, I currently am just a sole proprietor. I don't have an entity. What do I want to do? And so we can't have a partnership unless you have 2 people. So that doesn't really factor in there. So that's why we immediately go LLC and S corporation in that scenario. If you are going to get together with 2 people, yeah, absolutely. The limited partnerships an option. That kind of is good because so an LLC gives you limited liability protection. That's kind of what limited liability. So the general partnership does that for the limited partnership gives that liability protection to limited partners, but you have to have a general partner who is not limited in liability. So something goes wrong, the general partner gets sued. So there's reasons you want to put that together and have that set up that way. Again, consult your advisor if you think that might be an option.
Okay, great. And I think you may have touched on this at the beginning, but was there like a specific dollar amount that, like, hey, if you're bringing in X amount, like now it makes sense to look at being like an S Corp versus an LLC?
I think you'll get a lot of wishy-washy answers when you ask people that, because it's kind of a floating number. I always pin it, what I said there at the end, is at $80,000. If you tell me I'm a solo guy or girl and I'm going to make $80,000 a year every year plus from now until eternity or until I decide to not do it anymore, I would strongly recommend an S corporation as opposed to being a sole proprietor or a single member LLC, because we know we can set that wage low enough that we're saving the payroll tax on, you know, $75,000 or $60,000. So we're saving money there, and sure, the cost to have the entity starts to add up, but I think 80 is at least like kind of a good break even that I feel comfortable. You're not doing damage, and as you go up from there, it's going to kind of incrementally, you know, increase, and then it does kind of flatten off when you reach the Social Security limit, which is something I told Marche about, and I think she rolled her eyes at me. But anyway,
Yeah.
80,000 is kind of a break even I would feel comfortable with. So.
Great. Thanks, Eric. Yeah.
And that was net income, just to be clear, not gross receipts. That's net income each year.
Net income.
Solo person.
So this next question kind of gets a little bit out of the tax perspective on entities to take. So let us know if it's a little out of scope, but as far as someone who are between the entities, are there differences in how much you can then potentially like save towards retirement or the health expenses, you know, anything, those types of benefits or money that you can put away? Are specific entities better to do that with than others?
Potentially, yeah. So, and I think this more so though, well, comes back to what kind of plan can you have, right? So the main two that we always see, and you should talk to your advisor, somebody like Chase, about this, and then we loop in your CPA on it as well. But a lot of the time, again, and I'm thinking a solo person. So what are we going to choose? We're going to choose a SEP IRA or a 401k, most likely. The S Corp structure, as quickly as I can explain this, it's detrimental to a SEP potentially, right? Because a SEP is based on the percentage of your wage. So up to 25% of your wage, up to 54-ish, 55-ish $1,000 is what you can put away each year. And so if your 100% of what you make is subject to self-employment tax and seen as you know, this earned income, well, then you can put 25% of that away into a SEP. With an S Corp, the whole deal is we're paying you less in a wage to save on payroll taxes. Well, if we pay you a less of a wage, 25% of a less of a wage is less that you can put away. So all that being said, yeah, if you're in an S corporation, you're going to get more bang for your buck out of a 401k to start, at least, because you can pay yourself $20,000 wage and put away 19.5 if you're under 50 or whatever, right? You put it almost 100% of it away immediately. The way the SEP works, it's a percentage, and we're purposely decreasing your wage income, quote unquote. So it's a consideration for sure.
Okay. Yeah, great. Thanks, Eric. So this will kind of be our last question here, and then we'll sort of wrap it up. But this last one, you know, we kind of sort of sums up a lot of, you know, we've covered a lot. There is a lot of complexity, it sounds like, between entities and your situation, the tax consequences and all. I mean, this stuff, would you, and, you know, might be slightly biased as I am, right? But, you know, needing a CPA to really navigate this, would you maybe just highlight some of those benefits, or is this, you know, at certain levels, if you're just starting off and trying to figure out like what you're doing, is it something that you can do a little bit on your own until that complexity grows?
I'm sorry, can you give me the question one more time?
Yeah, so the really, you know, the benefits of, you know, okay, so do you need a CPA to really navigate a lot of this this kind of complexity within entities and trying to pick which one, or, you know, are they able to go off on their own and just kind of say, all right, I'm going to start an S Corp and then, you know, go from there?
Yeah, I mean, I have to always recommend you work with professional advisors if you're making this decision. Like you kind of said, we went through a lot. There's a lot of reasons you choose one over the other, and every situation is different. You know, I could say, hey, you know, based on everything you told me, you should be an S Corp. And then you say, but what if I change this one thing? And I'll be like, well, that changes everything, right? And so I definitely think doing it by yourself would not be the best. And it's an investment if you have a business, right? Like, there's going to be a cost to getting set up, and making the right determination from the beginning, I think, will save you in the long run. So go get that professional advice from a CPA, from a lawyer, from a financial advisor. Make sure you set yourself up, because hopefully you're doing it for however many years. It's an investment into the future. And if you, once the boats left the station, or like that just mixed up my euphemisms or whatever. But anyway, you know what I mean? You want to get set on the right path. So that'd be my recommendation. Always work with a professional for sure.
Yeah. Awesome. Well, thank you, Eric. I really appreciate it. I hope everyone here, we got a lot of questions, so it sounds like that information is well received. And I'll pass it off to Marche and we'll close this out. Thanks.
Well, thank you both for being here. I appreciate the discussion, and also thank you, attendees, for your great questions. So to our attendees, look for an email soon with a link to the replay of this event. You're welcome to share that replay with your friends and family and fellow business owners. And then, of course, here at Advice Chaser, we're all about helping you find an advisor who's a great fit for your life and your financial questions. Our matching service is free to you, and every one of our advisor partners has committed to offer a free initial consultation to anyone we introduce them to. All you have to do is go to advicechaser.com and click on the link to find an advisor. Once again, from Advice Chaser, thank you so much for coming, and we'll see you in another webinar soon. Bye, everyone.